Hi, I'm Kep Kepner, CPA here in Dallas. We've all heard of 501c3s. These are the national charities. They actually don't have to be national, could be local. But it's organizations like the March of Dimes or the National MS Society or the American Heart Association. These are organizations that collect donations from individuals, and those donations, because they're made to a 501c3 charity, become tax deductible by the people giving the donations. But that whole section of the tax code includes all other kinds of tax exempt entities. A homeowner association, for example, falls in that category. A political PAC or organization falls in that category. So do social welfare organizations. So let's say you live in a rural area and you and your community get together and decide it'd be great to have some sort of bus transportation between all the 100 families that live in the area, so that people can hop on and go downtown to get groceries and go to meet their neighbors. And so you have a bus service that you want to have, and you've found an inexpensive small bus that would do that, and you made it work for you. Everybody pays some dues to the organization. Well, that's not taxable. It's a tax exempt entity, but it's a 501c4. Now the IRS has some new rules for 501c4s, social welfare organizations. And that rule is that when you decide to form it, you need to notify the IRS at that time in writing. If you don't, then they're going to penalize you $20 a day. That doesn't sound like much, but if you form the organization and you go for a year before you have to do any tax reporting, and all of a sudden you own $6,000 in fines, that might scuttle your association right then. So you need to be aware of this. Then, when you file your first 990, which is the tax return for a non-taxable entity or a tax-exempt entity, then you would have to provide it more information. What's the purpose for your social welfare organization? How do you spend the money? How do you get the money? It's not required that every member of the association get equal benefit. It's just that everybody contribute. And what happens if you don't make enough money? What if you get all your members together and it's going to cost you $15,000 a year to run your bus service, but you only collect $10,000 a year? Well, it's okay actually to go out and get some other business, like using that to take people to the football games or to take teams around on behalf of the high school. But you have to document all this stuff. If you do, you can operate that entity and it will be tax exempt. So the real key, though, to running any kind of entity is to apply good, solid business principles to it. There's no excuse for running a slipshod social welfare entity. It ought to be run like a really strong business. That way you get the best results for the least amount of money. And we can help you with that. Give us a call. Thanks.